and I was eventually took over as the chief executive officer of a medium-sized financial services firm over in Europe, and built that from a struggling, sort of inward-looking family office type of firm into a public-facing, quite successful, full-service investment bank with sales, trading, brokerage, private wealth management, asset management, investment banking, uh, and corporate finance. After the financial crisis of 2008, I left that business and I began to look at other things. And I took a position as a member of the board of directors of one of the largest power utilities in Europe, based in Finland, and worked closely with the other board members in completely reshaping that company's strategy, and getting it out of a lot of dirty businesses that we were in particular, we were in a lot of CO2 producing businesses. We expanded into new markets. We completely reshaped the company's strategy, ended up getting out of the CO2 business and expanding into renewable energy, and essentially transformed that company from an old state enterprise into a very modern and very successful power utility that was almost completely CO2 free. Since I left that board position several years ago, I've been doing independent projects of my own, just working as a financial advisor and consultant to various individuals and entrepreneurs and companies, and sort of serving as a roving board member for a couple of those as well. So that's my background in a nutshell.
Amazing. So, with that said, let's talk about getting started into M&A, getting started into private equity or investment banking.
Mm-hmm.
So, I've seen a rise in popularity of individuals who want to go that route, especially as that's the higher level of finance, right?
Mm-hmm.
Doing deals, negotiating multi-million dollar, billion dollar deals.
Mm-hmm.
We've seen the rise of popularity is usually between the 20-year-olds,
Mm-hmm.
early 20s. They're graduating from college. They're looking to make a name in that industry, in that field. What are
Yeah.
some tips? What are some advice for these individuals that are looking to get started so they can get a competitive edge?
Right, right. I think the most important thing to realize when you're looking at investment banking and private equity is that they are really serious businesses, and the men and women who run private equity shops, private equity firms, and investment banks take themselves and their jobs extremely, extremely seriously. You're handling millions and sometimes billions of dollars of other people's money, of client money. You're doing transactions that have a transformative effect on entire companies or entire industries. And so investment bankers and private equity professionals take themselves and their firms extremely seriously. It's not to say, you can't enjoy it and have fun, but it's a very serious business. And so what you find at most investment banks and private equity firms is a lot of really, really competent, smart, confident people who are very aggressive about doing their business and getting things done and taking it very seriously. And so, to me, the way I was successful was that I put my head down when I first started as an analyst on for a big Wall Street firm a long time ago, and I just learned the business. I learned absolutely every single thing I could possibly learn about the business. I showed up, I worked ridiculously long hours, but I learned the business and the nuts and the bolts, and just every single aspect that I could learn. My financial modeling skills, negotiating skills, learning how to read purchase and sale agreements, learning how to structure transactions, so that by the time I got into more senior roles, I could take on a much broader scope of work, and that enabled me, I think, to be quite successful, and eventually what enabled me to become a chief executive officer, because I learned the business. And that, more than anything else, will get you far in the business, because the financial services industry rewards competence. as much as any other business because, you can see the results every single day. Deals get done or they don't get done. And if you're there, doing the deals, forming the client relationships and, using your knowledge and your enthusiasm and your drive to help people make money, you will be rewarded and you will be successful. There are other important things in terms of, like, for example, doing an internship, applying to as many different banks as you can or many different private equity shops and being willing and able to do an internship. That'll help you form relationships. That'll help you, figure your way how to navigate the world of banking and private equity. But you just have to get deep into the business as quickly as possible and, learn it and eventually, show off your skills in terms of what you know about the business in deep technical knowledge and understanding of all aspects of the business.
Right. So here's some statistics for you, Joshua. I read recently an article about phone anxiety.
Mm-hmm.
And it said that phone anxiety for baby boomers was about 40%. Millennials, 60%. And now Gen Z is about 80%. We've
And
noticed
by phone anxiety, do you mean
picking up the phone and speaking with people.
Got it.
Everything's transitioning now into texting. Texting is a favorable way of communicating. So let me ask you, what are some skills an individual should have in order to succeed in this industry? Because I've heard, one thing is knowing the numbers, but another thing is pitching the offer, right?
Right, and those are two equally important skills. And you need a broad range of skills. It's not just running the numbers, but it is being able to put together a pitch deck, a presentation that is coherent, concise, and being able to deliver it to a client in a way that's meaningful so that the client understands that A, you know what you're doing, B, the idea is good, and C, you're going to execute it properly. And that is just, there's no magic formula for gaining that skill set. It's just you acquire it over time by working hard and paying attention to the people who are the most successful. And I'll give you an example. A huge number of people are really bad in this world about writing and giving a presentation, a PowerPoint deck or whatever, because they tend to write down a whole lot of stuff and put, 5, 10, 12 bullet points on a page, and lots of really complicated graphics. And then they come in and they just read it to the client. And one thing that I learned early from extremely skilled bankers who gave fantastic presentations, they would write a presentation and they would only put maybe 4, maybe 5 bullet points on a page, but then they wouldn't really talk about the presentation. The presentation was to leave the client so the client could study it afterwards. But the senior relationship bankers, they would just talk, and they have this skill in being able to convey complex information without talking down to the clients. And getting over that hump and learning that skill is just something that, as I mentioned earlier, it takes time, and you just have to sit in 1,000 meetings and watch really good people do that, and realize that your client is an intelligent person who wants something to happen and is talking to you for a specific reason, and you need to understand that reason and address that client's concern.
Right. I feel like there's a disconnect. Can you give people an insight of what it is to be working as a deal maker in these firms? Because you talk about clients, and a lot of these individuals are doing it more for themselves personally. So what is it to deal with clients? What are you mostly doing?
Well, if you're in investment banking, rather than private equity. Because in private equity, you're doing deals as a principal, right? You're going out and you're taking investor money and you're investing it in principal transactions and managing that the company, managing that investment. So you're less client focused in private equity than you are in investment banking. And investment banking, just it's really about understanding what clients need, listening to them, being empathetic, being creative about coming up with solutions. But it really is just about engaging them and not being afraid to call them up on the phone. Because the fact is, when you're an investment bank, when a client comes to you, they need something, right? They need capital, they need advice, they need to sell, part of their company, or they need to buy another company, but they need something. You don't just go out shopping for investment banking services on a lark. You do it because you need something. And so listening to your client tell you what they think they need, what they want, and then addressing those concerns in in an honest and forthright way will always make you popular with clients. That's what clients appreciate, because they need something.
Right. So let me ask you this. And we got a question from one of the viewers that I'll follow up with.
Mm-hmm. Okay.
Let's talk about lead generation. Like we spoke on the phone, I told you Stanford has popularized the search fund model.
Mm-hmm.
And before you can even find anything, you got to build a team. We're going to touch on that in a second. But the number one way people find deals is through business brokers. Myself, personally, I've experienced business brokers. I don't recommend them. Their valuations are very surface level, and they seem very biased. Off-market deals, they're always the best, but you have to have access to a database, cold column, or email campaigns, or mail campaigns. What's your approach, or what's your tips with lead generation? How can we find companies that are worth buying?
In addition to just doing your internet research and working up the courage to cold call people, because there's an enormous amount of resources online now to find out about companies and things like that. But one piece of advice that I would always give to people: go out and attend trade shows, go out and attend conferences, because people want to feel like they're being paid attention to. So if you go to a trade conference or some industry event, and you just start talking to people, and you say, "Hey, my name is Joshua Larson, and I'm an MD at the 123 Investment Bank, and tell me a little bit about your company," and people want to talk about it. I think there's a popular vision in many people's heads about how investment bankers are these sharp-dressed sharks and just trying to take advantage of people. And we're not. Investment bankers are talented financial people who solve complex problems for people who need their problems addressed. And doing that via email or via text is very, very difficult, because business owners want a person. They want to work with a person. They want someone on the other end of that phone that they can call up and say, "Oh, I got this big problem. I have a big debt payment due coming up in a couple months, and I don't know how to refinance it." You say, "Okay, well, we'll deal with it." But they want a person to deal with. So as much live contacting as you can do is by far the most effective way to develop leads at any level in business, because people remember when you talk to them, and when you shake their hand and you look them in the eye and you say, here's what I can do for you.
Right. All right. That's great. That's great advice. For those who are doing online lead generation specifically, for the most part, a lot of these business owners fall into the baby boomer age category.
Right.
What is the best way to communicate with these individuals? Is it a text? Is it an email? Is it a LinkedIn connect? Is it calling up the company and asking to speak with John? What's the best way?
It all of those things are important, but you have to be a little circumspect about it because you can't overdo it. So usually, I think these days, an email is probably the best way to introduce yourself. And hi, my name is John, and I'm with the ABC Investment Bank. I understand that your company is interested in or what, but do a concise, polite email and then follow it up with a phone call. And you know what? That hasn't really changed since I started in investment banking. In the early 1990s. Like I said, people want to be communicated with, and they want to be, they want a person. And so for me, it's usually an email and then a phone call.
I see. I see. I feel like that's great advice. Now, let's talk about the question this individual asked. He said, "Is a college degree necessary if wanting to get into electric cars and aerospace industry? I want to make myself valuable to a company, or just thinking of starting a car manufacturer."
You need a college degree if you're going to go into a technical field, and the higher the degree, the better.
Okay.
But if you're going to get into a technical field like building electric cars or getting into electric vehicles, you pretty much need a degree in engineering. I think so because when you're in a highly technical business like that, financing is always a critical part of the success of any business, which is to state the obvious. But the fact is that raising financing from outside sources requires that you have a lot of credibility. And as you and I spoke about on the phone the other day, when you just come to someone with an idea and you don't have a plan, people aren't going to take you seriously. Because I get approached all the time by people who have business ideas, right? I want to do a consolidation of the widget and sprocket industry on the East Coast. Or I want to do a roll-up of the home healthcare industry, in Texas or whatever. And I'd say, okay, great. That's an idea. Now tell me about your plan. And 95% of the time they say, "Oh, I'm still working on that. I just want to hire a bunch of directors to point me in the right direction and give me advice about how to do this." And I just shake my head and I say, "No, you have to have the plan. You have to be the person who drives this. You have to be the one with experience because it's your idea, and you have to. You can't hire outside people to do all that. You've got to do it yourself because you've got to learn the business. You've got to have credibility with outside investors and board directors who are asking them to lend their name and their reputation to this or that project."
Okay, Liz. Touching on that topic, if I was to approach you to be on my team, like we said, whenever you're asking for something, you have to provide something of equal or greater value, correct? What do you think would be a good value proposition for me? All right, let me give you an example. Say I come to you and say, "Hey, Joshua, I'm looking to, say, do a roll-up in medical practices, physician offices, right? And
Right.
I've been cold calling, and I reach out to a few individuals, and I got 3 people who are interested in selling. I was able to get financials from them. I did my own analysis, and say the businesses are between 1 and 5 million revenue, and the business owners are willing to sell for it 3 times. I got the deals, I got the leads, they're interested, but I don't know where to move from here. I'm stuck."
Right. You need a strategic plan. And the way that I've always built business businesses up, whether it's a business unit for a major bank or it's a private equity fund or it's this being CEO of this firm, you always have to start with a large strategic plan. And the first thing you have to do in building this strategy, you sit down with your team or the people who know the business, and if that's just you, that's just you, but it's often better to do it with other people who know the business well. And you say, okay, what do I want this company to be in 5 years, 7 years, 10 years? What's your grand sort of vision? And I'll give you an example. When I was with the utility company in Finland and we completely redid the strategy, that's what we did. We went on this big management retreat and we went with management, the board, and we stood up there and we talked to each other and we asked the question, what do we want this company to be in 5 years? Because right now we're just a collection of generating and transmission and distribution assets, and we don't have any strategy whatsoever because we had a new CEO and we had a whole new board, and it was time to reformulate the strategy of this company. And so we sat down and we just mapped that out. We said, okay, we want this company to be a leading provider of electricity solutions based on renewable energy to customers in the Nordic and the Baltic region and in parts of Russia. And that was just a big vision statement. So we knew we wanted to be renewable. So we wanted to get out of the CO2 business.
Right.
We knew we wanted to get out of a couple other businesses. We wanted to get out of transmission and we wanted to get out of distribution because those are highly regulated, unprofitable, well, barely profitable businesses. And we knew we wanted to invest heavily in, like I said, in renewables and expand our markets beyond our home markets of Finland and Sweden. So once we had that strategic vision, then we can start going into the planning stage. Okay, we want to be in renewables. What does that mean? Well, we got to think of all the different sources of renewable energy. There's hydro, there's nuclear, there's biofuels, there's solar, there's wind. There's a bunch of other creative renewable technologies out there. And so then we just went through the exercise. Well, do we want to be in nuclear? Absolutely, because we already have a bunch of nuclear plants, so let's keep investing in nuclear. Do we want to be in hydro? Well, maybe not. Hydro is kind of expensive to maintain, and you got to do a lot of heavy investments, so maybe we won't be in hydro. And, we took industry experts, those of us who, knew the utilities business and knew the markets, and we just made rational decisions about what, based on our grand vision for the future, what we then had to do to fulfill that vision. And then the rest of the strategy just writes itself. But that's what you need to do, is you need to step back at 30,000 feet and say, here's what I want this business to be in 5 years. And all the rest of your strategy flows out of that. So if you have 3 medical businesses and you say, okay, well, what do I want this grand vision of mine to be in 5 years? You need to step back and say, okay, I want to have 20 providers of a range of services ranging from, imaging and physical rehab to, blood testing or whatever. Understand what the market is. And, it's, I think, you get a team of people who understand the medical services market. And you start putting that grand vision together. And then once you put the grand vision together and you kind of start to put some shape around the overall strategy, then the rest of it just kind of writes itself. And that gives you a roadmap, and that becomes your business plan, because once you start filling all of those, filling all that information in, you'll figure out how much it costs. You'll figure out how to generate the leads. You're going to figure out how it's traditionally financed and who finances it, and therefore what kind of investors you should be talking to. And it's this sort of iterative process where you just do the steps that you need to do, that I've just described in terms of, mapping out this grand strategy and then just filling in the roadmap.
That is a great baseline. I appreciate that, Joshua. Now let's talk about the team, because that's also important. We got the plan. Next step is a team to execute. What do you think
Mm-hmm.
are core members to this team? Let me give out a few examples. COO, CEO, CPA, transactional attorneys, investment bankers, industry experts. You could go on and on, but what's actually needed in order to start getting the wheels rolling?
Mm-hmm. Well, you need a good, solid, technically competent, enthusiastic, hardworking leader to really be the figurehead of all of it. And I get back to the Finnish utility company. We had a fantastic CEO, and he was inspirational. He was hardworking. He was creative, and he really gave us direction that we as board directors could then apply to overseeing to make sure the strategy got done. So you need a very good leader is the most important thing. You need a good operational person to make sure that the actual businesses themselves run. So, like when I was the CEO of that financial services company, one of the first people I hired was this very operational guy who knew the banking business, knew the financial services business. He'd put one together before, and he was there to keep the wheels running and keep everything in a straight line. You need a good strategic finance person, someone who understands that finance is not just about cash flow. Finance is a strategic tool that you can use to build your business in a very strategic way. If you structure your balance sheet and you arrange your revenue model and your cost structure in the way they need to be, but you have to have a strategic finance person, not just an accountant. In a technical field like medical, I would think you probably need some good advisors, and like maybe a chief medical officer or something. But you're going to need someone with impeccable medical credentials. Let's just put it that way. Who can tell you all about the business, and if you look at a technology, for example, for I don't know, doing whatever, he can say, that's a viable technology. It certainly makes sense to invest. Like this deal you're closing soon, you probably should have somebody say, yeah, that treatment method, whatever they're doing, is good, and it is a viable technology that people are going to use going forward. And so I think you're going to need a technical advisor or two on that side. And then you just need, I don't know if you need much of a sales force, but because I don't know the business well enough to tell you about it, but you always need good people in sales, and you need some good technical people. But it's that core team that I mentioned, I think is the CEO, a chief operating officer, a medical person, a strategic finance person, and then you'll need to backfill a lot of technical stuff with accountants and stuff like that. But you need a big legal team. I don't need a huge sales force, particularly not in medical. Now that I think about it, but again, it's getting you to think strategically about how you build this business out.
Right. Now, let's touch on
Real
two
quick, hold
parts.
on.
Yeah, go for it.
One second, Valentino. So, a lot of what we've been seeing, Josh, is a lot of people that don't have the experience
Right.
or the level of competency, sadly to say, to pull off a very responsive and high-level team. Now, the team that you just described putting together, that's great. Sounds like a really high-level team. But and correct me if I'm wrong here, Valentino, but I don't think majority of our members are going to be able to, put a CEO together and have a large legal team because they just don't have the capital starting out,
Right.
and trying to do this. And me personally, in my experience, I don't think that a CEO is someone they need outright. But it depends on what the business model is. What's the strategy? Are you gonna? Does that CEO have M&A experience? Has he,
Right.
done a lot of deals? Is he someone that you as a founder feel comfortable with? Having lead the company in the right direction, like you said, you're very much the one who's driving the founder, that is, and the advisors. I feel like you have these advisors to tell you, hey, slow down on this road, or speed up a little bit, or this road's going to get bumpy. This is how to maneuver it. I feel like that's their job. But having that specific CEO individual, from my experience, is not someone that I needed outright. I needed more so of just a deal maker, right? So, do you think that it's easy to get all these high level people that you just described a CEO, because they're going to go, they want to get compensated? How
Right.
easy is it for
Right.
someone with no capital starting out, or even capital commitment from investors,
Right.
to have
Right.
these high level people put together and say, okay, let's actually give you, our best to make sure the company is a success? How reasonable is that?
It is a challenge. There's no question about it, because really good people, like I describe, are at a premium. Uh, but these days, I think, given the events of the past couple of years, I think it's probably a little easier than it was. It's because I think there are more people in the market. But there are a lot of great people out there. There really are. Uh, Using like LinkedIn or Indeed or something like that can be useful, but I mean, like anything else, it's just hard work and enthusiasm, and you have to be able to impress people with your credibility. But there are people who will work for Founders Equity. I think it's hard and perhaps unrealistic at this stage, to get someone to work for 100% equity with no current compensation if you're going to ask them to work that hard, because doing a consolidation play in any industry, doesn't matter what it is challenging, and that's hard work. And you get a variety of companies of varying quality. You'll find one that has absolutely pristine, beautiful audited accounts, and then the next one you go to, it'll be an absolute wreck, and hand done stuff on a calculator and a double ledger rather than a spreadsheet or something like that. Because the quality of businesses and the quality of the information that you'll find, particularly in the mid-market level, varies wildly. So it is a ton of work. So it's challenging to find that person.
Yeah, also, I mean, they're going to go through a ton of individuals anyway. It's not like the first set of people that you get with you initially, they're not going to be the ones that's going to be with you by the time you get a deal. And it's going to take some time as someone just starting out, very little capital, right, to try to get these deals in. It's going to, and this is, I think, a myth. I don't think there's no way you could actually pull off a deal without spending anything out of your pocket. I don't believe in that at all. That's not been my experience. Even though you're not putting a large amount of capital into the pool of other investors, you may not be putting capital into whatever fund you have as a co-GP or whatever the structure you have set up. But you're going to
Mhm.
have to spend something to go see the seller, back and
Yeah,
forth trips, just small expenses that's just going to add up over time, which you're not going to get a deal and just close it in 2 3 months or anything like
correct.
that, especially with no experience. That's not happening. I mean, raising the capital alone is going to take, 6 months plus. And I'm being
Oh,
generous
easily.
here.
Yeah, yeah, yeah,
I'm being
easily.
generous here. So I just wanted to, really talk about that
Mhm.
and make sure that a lot of people understand that it's going to take a bit more than, than you actually think. And it's going to take a lot more than you actually think as well, out of pocket wise.
Yes, and as I said, I mean, uh, you, you have to be very credible in your storytelling about how you want to build this business to get people to come on board, as both executives, board directors, investors, stuff like that. Because the level of people you want to talk to, we all have reputations, and we don't want to lend our time and name to an effort that we think doesn't have any credibility. And so that's why wanted to emphasize the importance of having a full-fledged business plan in place before you go out to investors, because again, just to repeat myself, if all you're pitching to someone is an idea, you're never going to get anywhere with anybody. I was telling a story the other night of a young man who approached me earlier this year. He was young, early 20s, and he had caught the private equity bug, and he was just graduated from college, and he was convinced that he was going to get into private equity. And not only was he convinced that he was getting into private equity, but he was going to put together, as a 23, 24-year-old with no experience, that he was going to go out and convince investors to give him enough money to do a $13 billion leveraged buyout of one of the largest aerospace companies in Europe. And it was such a strangely detached from reality, because he didn't have the slightest idea of how to raise money. He didn't have the slightest idea of, how to get people on board. He didn't really know how LBOs worked. And he said, but look, if I offer them, a 25% premium on their share price, they're all going to have to sell to me because it's their fiduciary responsibility to do that. And I said, and where are you going to get the money? And he said, as long as, I make them the right offer, the money will come because it's going to be such a great deal. And I see a lot of that in young people who have ambitious ideas, but haven't taken the time to learn enough about the business that they're looking at to come up with a really coherent and credible strategic plan for how they're going to pull this off. So that's why I'm trying to emphasize the importance of the strategy, the importance of being credible, and having a coherent and financeable business plan.
And I can bet I know where that individual that reached out to you came from, as far as the information that he got anyway. And that's kind of what we want to discuss, is that a lot of people make promises online, these gurus, and say, hey, you could go out and do M&A with very little experience. In fact, I believe they say you could do it with no experience whatsoever. Just get a team, rely on that team specifically, and then you're going to get a deal done. That has not been my experience so far, and I'm not sure I know anyone whose experience has been that. And so let me just ask you, what would it take for you to work with someone? Obviously, the gentleman that reached out to you, he didn't have his things in order, but I think a lot of nowadays there's instant gratification in our society. It's higher than ever. So the people that reach out to you, they just want to get, hey, let me set something up and let's go. Tell me what I have to do. And they're not really trying to start and do a business plan and do all of these things that you just mentioned. They just want to say, hey, look, this is an industry. I know it because I Googled something. It tells me it's, 15% profit margins or 10%. And, with no other verification behind that, and they say, look, I know to put a team together, right? And they just run with it, and they want you to actually take them by the hand and lead them. And then they're mad when you're like, look, my time is valuable. and they get upset with that. Mm-hmm.
I'm working with a guy right now who has done all the stuff that he needs to do. He's an experienced executive in the field where he wants to work. He's got some of his own money. He knows some investors, but he also knows the business really well, and spends the necessary time with me to come up with a really credible plan. And so now we have a realistic shot at doing a nice little LBO of this consumer products company that he thinks he can get for a good value. And it's because he has sat down and done the work, realized what he needs to know, realized that it does take experience, and you do need good people and a good team to be able to pull a lot of this off, because otherwise investors and frankly, counterparts, companies aren't going to take you seriously without it either. You can't just waltz into a $10 million whatever food producer or something like that and say, I'd like to buy your company from you. Especially in the middle market where people have spent decades of their life, investing in and building a company, and it's sort of everything to them. They don't want to give that company to someone who's going to run it into the ground. They want to know that that person is going to continue their legacy and keep that company going and make it something that stands the test of time. They won't sell to just anybody.
So now, a lot of people have a hard time getting a deal. We talked about lead generation previously just a little bit. Now, a lot of people have a hard time actually getting a off market deal, and we know broker deals just really aren't worth the time and effort.
Right.
What advice would you give to someone who's chasing a deal, trying to put something together? Me myself, I kind of lucked out. I say luck has a part to play in that, and obviously, with zero experience, sellers are going to be reluctant to just hand over what
Right.
they basically their legacy to you. They don't want to
Yeah.
do that. And there's a lot of selling that goes into it to an extent. There's a lot of faking it till you make it, because as much as you may know about that specific business you're going after, you're no expert in comparison to the seller.
Right.
Even if you do have industry experts or advisors, with respect to that field, they have experience in that field, whether it's 15, 20, 30 years, they still haven't been operating that specific business to know
Correct.
exactly what the climate is like over there. So you're
Correct.
not going to be any kind of, expert anywhere near where the seller is. So there's going to
Right.
be some kind of faking it until you make it, but you're also going to learn as you go from meeting with the seller. You walk the deal, you see I believe the staff that's there, you interview them, from just back and forth meetings, which I believe you should be doing, right? Multiple visits to that facility or whether the business that you're buying, you're gonna start getting acquainted with what's going on, right? So you start learning that
Yep.
business. But how would you advise someone that doesn't have that specific experience to get deals like this? Or is there a different approach they should be taking to actually be in front of sellers? What I'm trying to say is it better for that specific individual to reach out themselves, or should someone on their team reach out? Do they have
Well,
better?
I think ultimately the person who is the founder and who has the idea and is really driving the process needs to be the leader in all of that, because sellers
Yeah, but see the
will.
thing, sorry, Josh, but the thing is, these guys don't have that leadership skill you're talking about, and that's the problem. Yeah, because at the end of the day, right, like they have to be the face. Like myself, I'm very much out there. I walk every deal. I speak to the seller. I engage. I structure the deals. That's great and all, but I'm 2+ years into this. But for those who are just getting started, like super greenhorns, you know, and they just want to just go out and run, they don't have that leadership experience. So how are they going to just grab the
I,
bull by the horn, so to speak, and take it that,
well,
or is that a fantasy?
I think you see, as you mentioned, there are remarkably few deals actually get done when you see the the nominal book of business for your average business broker. They probably got a huge list of clients, and they probably do fewer than 10% of those deals actually come to fruition within a reasonable amount of time. And so there really isn't a trick other than being diligent, being thoughtful, being creative about how to structure stuff. And for that, you just have to build the experience and know how the market works, and, understand how earnouts, and understand how vendor financing works, and understand how, excuse me, all of the, excuse me, all of the potential options for structuring and financing a potential M&A transaction, how all those work. And for that, you need experienced people. There's just no
Yeah,
substitute for it.
and one thing I would add to that, not only do you need someone who's going to lead, but you need someone who's really able to grab the ball, right, and be that quarterback. because when you're doing a transaction, time is of the essence, especially once you get to the. I mean, having a LOI, that's great and all, but once you get into the PSA stage, that's really when things start to get serious, because now
Mhm.
you're talking about binding contracts, and not
Correct.
having someone who's able to come in there and grab the ball and be that quarterback will actually set you back. And this is me
Mhm.
speaking from experience, because
Yep.
you're having someone who's gonna lead the acquisition from the you know when it comes into the closing. But if that individual is slowing down in any areas, that's actually going to set you back tremendously.
Yep.
So you not only need
Yep.
someone with experience closing deals, but you have to make sure you have someone who can play that quarterback role, because a lot of guys, that are at these firms, they don't necessarily, have that leadership experience individually. As a group,
Yeah.
yeah, that's great. They can work because they're relying on John here. Hey, Tim, he's going to bring this in. Justin has that part of it. This is the M&A group. It's about, 4 or 5 guys, but working individually, they may not have that skill to just grab the bull by the horn and just take off and
Mhm.
say, hey, look, all right, I know these are the areas where you're weakest. Let me pick you up here, and let me just drive this a little bit for you to where we're
Right.
over the finish line. So you have to be very careful about not just having someone with experience, but someone who works well under pressure, someone like you, right, and someone
Mhm.
who's just able to just put things in place, right, strategically, to make sure the deal moves along accordingly. Because
Yeah.
at the end
And
of the
that's
deal,
just
a lot can go wrong at the end of the deal.
yeah, and
It
that's
tends to go wrong.
really a question of experience more than anything else, so that you do know exactly what the next stage is. I started talking with the guy. I've signed an LOI. We've signed an NDA. He's now starting to give me financial information. So, and there's just all the stuff that you have to do. I mean, M&A is very process driven, and there's no magical tricks to it. You just gotta follow the process, and to know that process, you have to have done it before.
Yeah, so let's just quickly touch on because you do have some growth experience. As we
Mhm.
spoke on before, you want to have a CEO on your team, but what's your perspective on having the right CEO at the right time? As you know, different companies have different life cycles. You have
Mhm.
the beginning stage at the startup. You have where the company is profitable, they're past the startup phase. And then you have the companies where, they've been super successful, but now, for one reason or another, it's just at a decline. So, do you believe that different companies need different CEOs at different times? And what kind of CEOs do
Well,
you see with a startup and a mid, profitable company and a dying company?
good management is good management at the end of the day. And most companies that fail because of a failure in management at some level. Uh, a good CEO is going to be a good CEO regardless, because they have the vision, they have the strategic plan. They prepare for contingencies. They know how to manage risk. But really, a good CEO is a good CEO, and sometimes I think at the beginning, if you're doing a startup, yeah, you need a super energetic, charismatic leader who can just go out there and inspire people, and maybe he's not so great operationally. But that phase of a business usually ends pretty quickly. And so I think by the time you're out in the market talking to people about raising financing and getting serious with potential sellers and potential investors, you got to have that guy in place, because he's going to be the one that does get it across the finish line, because he'll be the one with the credibility. He or she will be the person with the credibility to get investors there, to get potential acquisition targets there, and for all of the things that you need to do to do a successful transaction or transactions.
Okay, so just quickly, in a startup, you would want a guy who's really great with, I guess, volatility and growth per se. That's kind of the CEO you're looking to lead. Is that
Well,
correct?
at the beginning, well, like I said, I think good management is good management, and if a CEO candidate has the capabilities of being a good manager, and there's a huge difference in being a good manager versus being a good banker or a good M&A guy. Management is a skill unto itself, and it requires vision, strategy, credibility, knowledge, being authoritative. And I don't think the qualities at any particular stage in the life cycle of a company are going to change much. You may have someone who has more experience at a startup and so has done it, multiple times, and so adapts more easily to that atmosphere as opposed to someone who's managed an industrial company as a senior guy for 30 years and is used to slow growth. But that portion of a company's life doesn't last a really long time, especially if it starts to be successful, because then revenue starts coming in and you start having to have policies and you start having to have a legal team, and you start having to have a whole bunch of the components of an operating company. But that phase usually sets in fairly early in a company's life, and so I think a good manager is going to be a good manager regardless. Sorry.
All right, let me hop in there real quick. I want to circle back into what we were talking about, business owners. What is the best way we can build rapport with them
Uh,
in order to get them to sell or open up to the idea of selling?
Just building relationships, and like I said, being friendly and being empathetic, and make the effort to learn about their business and to understand their business, because they'll never sell to you if they think you don't understand their business. And it's really, as much as anything, about building personal relationships with these people, so that they can get enthusiastic about the prospect of you owning the business that they have built. And that's as in so many things in life, and in business, it's about building good relationships with people and getting them to trust you. You have to become someone that they trust, or they'll never work with you.
So it's
Real
like a
quick.
stage of rapport building instead of just a one-off thing, correct?
Absolutely. Yeah. I mean, I never, the clients, when I was most successful, it was with the clients that I'd been working with for years. And people would hire me, or the company I was working for, because they trusted me to ensure that their interests would be defended and that their best interests would be met, because I had a personal relationship with them. So if it was the CFO of a company, or if it was the managing partner at a fund or something like that, they'd say, well, we want to work with you because we trust you. And that's how successful business relationships are built.
Great.
Hey, real quick, Josh, just to pivot back on our conversation, I had one last question. Do you believe, so, okay, management is management, great, but do you believe the CEO of General Motors, GM, could run Tesla in its early stages? Obviously, Tesla is a successful company now, right? But do you believe GM, which has already been established for 50 plus years, right? Do you think that CEO would be able to step in and run Tesla in its early stages? Would it still
Yeah.
be the same outcome?
Would it still be the same outcome? I mean, Tesla is such a unicorn that it's hard to make a blanket statement about that, because of the unique nature of Musk and his just the way he works. But could a successful car company executive I mean, the short answer is yes, I think probably, but it is so closely related to Musk and his strange personality that I think it's hard to make that blanket statement. But like I said, in my experience, good management skill at any stage of the game is good management skill. Now, are there some CEOs who have, been, let's say, serial entrepreneurs in their careers and done a bunch of startups and been successful, a lot of them, and that's their particular bag? Yeah, but that's just because that's what they love to do. It's not necessarily that they have any particular unique management skill that allows them to be successful at the startup phase as opposed to during the mature growth phase. It's mainly about what they prefer to do and what they love doing.
Right. That's a great note. We're actually gonna end on that. This is one of those episodes which you have to replay a few times because of the amount of information, the amount of depth is great. Joshua, you're amazing. I appreciate you having you on this podcast.
My pleasure.
I know this one is gonna be on repeat, and well, the people overall, they haven't asked any more questions. It's been very straightforward so far, and learning from individuals like yourself is what's gonna better the community. So I appreciate it, Josh.
Okay. Well, like I said, it was my pleasure, and I hope we can do it again sometime.
Sounds great.
Thanks for the time, Josh.
Okay. Thanks,
Thank you
guys.
so much, Josh. Take care.
All right. Bye-bye.
All right, guys, and we end on that note. We're renaming to M&A Verse specifically for the podcast because we want to encompass the whole universe of M&A, not just valuations or one-off topics. We want to encompass the whole universe. Talk about the metaverse. We got the metaverse. We got Web3. We got all these new technologies coming in the market, and we want to capitalize on them. How can we integrate them? How can we take advantage of them? As you guys know, the billions are made through innovation, and at the end of the day, we want to buy these businesses and grow them and innovate them. Innovation is where you will really see that growth. But I'm going to end it on that note. I will be posting the link in the description, M&A Verse. So it's MNA Verse.com. Very simple. And I'll leave you guys on that note. We're going to be streaming next week, so we'll keep you updated on that.